First order of business, I have one spot available for the SMT Premium Newsletter. The Premium Newsletter is $75 per month. If you want to take that spot, you will need to email me and make a request. I will put my email address in the description below. All right, so I'm going to take a look at silver today. Let me annotate this chart first. Okay, so I want to look at a couple things here. We've got a really long sideways consolidation, and then we've got, once the Fed really started to raise rates to try and fight inflation, of course, you can't have gold and silver surging higher during this period, so, blatant attacks to try and suppress the metals. And that succeeded in breaking silver down below this large consolidation box that it was in. Also, major breakdown in not as bad though in gold, and the attacks also centered quite heavily in the mining stocks. But you can see here what happened. We have a slight break of this. The market tries to recover because the fundamentals are not supporting lower prices for metals. We printed trillions and trillions of dollars. So the fundamentals, the government is trying to fight the fundamentals in the metals complex. And I've been on record that this is, they're not going to be able to hold this price suppression. And when it breaks, it's going to result in a much more violent and a much larger magnitude move than would just happen naturally. So here we have the break of this consolidation zone. We've got a couple of attempts for the fundamentals to regain control and bring silver back into the consolidation zone to take silver higher. Silver bottoms well before gold. Gold bottomed out here. Silver bottomed before gold. That was a warning sign that the suppression was about to break. The same thing in the miners. They also bottomed back here, way considerably ahead of where gold bottomed. And then the rally starts. The suppression starts to break. The rally starts. Silver regains this major consolidation zone, and then we get this sideways consolidation here, and again another attempt to suppress price and break this consolidation zone to the downside, which again temporarily succeeds. But again, as I said, when this suppression, when it breaks, when they can't hold the suppression any longer, it just results in a more violent move in the opposite direction, and that's exactly what we're getting here. So the attacks broke price down below this consolidation box. They couldn't hold the suppression, and now we've got a violent and very powerful rally back in the opposite direction, well back into the consolidation box here, and threatening soon anyway to break through the upper side of this consolidation box. And when it does, silver's going to make a run probably pretty quickly to this $28 to $30 zone. And here is the difference, I'm going to say, between this rally and this rally. This rally took a lot of weeks to get up here and then form this consolidation. Obviously this was suppression to try and block silver from making a higher high, because gold did make a higher high during this period. Tested 2000. So obviously silver is being suppressed here and not allowed to break out of this consolidation. But it took a lot of weeks to get there, so we were running out of time. That's not the case now. We're starting a new intermediate cycle. The suppression has broken. It is producing a runaway move, and the mistake I'm seeing a lot of people make, and they made it over here too, is, and let me widen the chart just a bit. So you get this long decline here. This it conditions people to expect failure and frustration in the metals, and then the beginning part of this intermediate cycle is pretty choppy. So it's kind of confirming what had happened here, that traders needed to be cautious, they needed to sell quickly. And so then when we get the last phase of this intermediate rally, people are not able to hold on to their positions. They're trading in and out, and they miss a lot of the rally. And I warned people, when I saw the divergence here between silver and gold making a lower low, silver and miners did not. I said, I told people I was about 99% convinced that gold had completed its 8-year cycle low, which now there's really no denying that did happen. There's no question at this point that gold has completed its 8-year cycle low. We're now in the advancing phase of a new 8-year cycle. And I warned people, I said, you got to use different tactics during this initial rally than what worked here. What worked here was to, sell quickly on any kind of rally. That doesn't work in this type of environment. You've got to just hang on and and let your positions work and try and ride out the entire intermediate advance. And that's what we did. And traders made some really good money during this initial rally out of the 8-year cycle low. And now, at this point, again, even though this didn't last nearly as long, I'm seeing the same behavior. Traders got frustrated by the attack that broke silver down out of this consolidation. They were expecting a move upwards out of the consolidation, and so this just cemented into their psyche that metals are just frustrating. There's just no way to win at this market. And so I'm watching people make the same mistakes, and it's even more important not to do it this time, because this time we're very early in an intermediate cycle. So we are going to test. This is just a first daily cycle, and I think we're only about 20 days into this. So we're going to test the upper limits of this consolidation box. And not only are we going to test it very early in an intermediate cycle, we're going to test it fairly early in a first daily cycle. And usually there's anywhere from 3 to 4 daily cycles embedded within a larger intermediate cycle. Down here you can see that RSI is embedding in the overbought condition. So I watched as people tried to take profits as soon as the market got overbought. I warned people, I said, in the advancing phase of an intermediate cycle, overbought doesn't mean the same thing as it does in the declining phase of an intermediate cycle. In the advancing phase, overbought can embed in the overbought condition, and that's exactly what's happened. So this is not a sign that you have to take profits quickly. This is a sign that we're in the advancing phase of a new intermediate cycle, and that we have many weeks to run before that intermediate cycle tops. And so again, and let me back this chart out. And I've noted this before. When when rallies test these major resistance zones or make these breakouts early in an intermediate cycle, that's when you can get a sustained breakout. When they test it late in an intermediate cycle like here, then you usually don't get a sustained breakout. Here's an example here as well. So we're going to test this zone and potentially break out above this resistance early in a first daily cycle, which opens the door for a run to test this $28 to $30 range, maybe even during this first daily cycle. And if we test $30 on silver early in the larger intermediate cycle, let's say, I think we're on week 4, I believe, of the gold cycle. So let's say if we can get a strong push and test $30 by, let's say, week 7, 8, or 9, then we have a strong possibility of a breakout and a sustained move above $30, and that could, admittedly, it's not a huge possibility, but that gives us the possibility of a run to $50. So if we can get up here and test $30 by week 8, I'm going to say, then we have the potential to make a run towards $40 or $50 during this intermediate cycle. So you've got to use different strategies here. Anytime there is a potential that an asset could be entering a runaway move, and that's what is potentially happening here in silver, you have to give it the benefit of the doubt, and you have to just hang on to your positions. You can see nobody accomplished anything by trying to dodge down days. They've, the best that we've done so far is 2 in a row, and one kind of minor down day here. So trying to dodge these, you didn't really accomplish anything. I mean, how would you know that you've got to get right back in immediately right here? You would probably be expecting more decline, and then all you do is you miss the next rally. So anytime an asset is potentially entering a runaway move, you've got to give it the benefit of the doubt. And in a runaway move, you cannot sell, you cannot lose your position, because this is what happens. The down days, they don't accomplish much. Sometimes they only last 1 day, maybe 2 days, and then you're off to the races again. So you end up missing huge chunks of the move. And that looks like what is happening here with silver and potentially gold. The cartel is obviously trying to suppress gold at 2,000. They're trying to keep it locked below that 2,000 level. They are not going to win that battle. Again, when the suppression breaks, it just results in a more violent move and durable move to the upside. So all of these attempts to hold gold below 2,000 are just going to make the rally even more violent when the suppression breaks. And I suspect that gold is going to probably test those all-time highs during this first daily cycle. And I think it's a pretty good bet that silver is going to also test this resistance zone during this first daily cycle, and potentially could break out and go to 30 during this intermediate cycle. So anyway, I've got a lot more in-depth analysis in the weekend report that I published yesterday. And as I said, I've got one spot open for the SMT Premium newsletter. It's $75 monthly. Send me an email if you want to take that spot.